India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday morning, and thank God for that. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Morning, guys.
Hi, good morning, Prashant. Good morning, Nigel. Morning. A Friday morning, and looks like it's going to be a good one, given not just, it's a bounce back across the global markets, but Neeraj Chopra clinching that silver medal as well. So
well, and the hockey team clinching the bronze.
Yes,
so good going out there. We have added to our tally overnight, champion stuff overnight. So Indians have done well at the Olympics, and hopefully the markets take a cue as well.
Yes.
But, that hockey medal for me was very, very special. Shrijesh, that was his final game that he played for India. The custodian has been standing in the goal for the last many, many years. Took India almost to the finals, and a bronze medal is what we take home. So champion stuff. Thrilled about it.
Absolutely. And, I hope we can continue with the good vibes through the course of the day. Really some jubilant pictures there on your screen. So they're just showing the elation of the team there worked as a unit and got the bronze medal home. Neeraj Chopra, of course, I was thinking I would have gone for gold, but silver is...
Yeah.
but that's gold standard, right? He's won so many medals over the last so many years, and to maintain that kind of physicality over 2 Olympic cycles, it's just quite incredible. Well, as I said, let's hope that we have the market which gives us the same kind of vibes, positive, up and up vibes, because you've got global cues which are positive. I'm going to start there. So we have a decently nice rebound on US markets. The S&P was up about 2% plus, Nasdaq 2.8%, that's about almost 3% gains. The Russell 2000 was up about 2.33% higher. So this is pretty good stuff coming through, and it you got one more session later today out of the US. I just hope that this is, we kind of end this week in a positive note, because it's been so volatile and so tough. Now, the market rallied in the US after lower weekly initial jobless claims. And, we were highlighting this yesterday that it's a weekly number. Usually we don't even pay too much attention to it. But it became very important, because of the growth scare. And sure enough, the jobless claims came in lower than expectations. And they came in at about 233 versus 250. This is for the week ended 3rd of August. Remember, the initial jobless claims, and the reason why this is important at the margin is because it's a good leading indicator of a recession going back the last 15 years. And it remains at historically low levels. Lots of people are pointing out that the 4-week moving average of the initial claims is at the highest for this year. It is the highest at the highest for this year, but compared to history, it's still at low levels. It may be higher, but over a longer period of time, it is lower. Now, you also had one more headline. I just wanted to mention this. You must have heard us talk about the SARM rule, right? Which is that, unemployment rate, if it rises by more than 0.5% over, the previous 6 months, then you are in a recession. Guess what? Claudia Sahm, who is a Fed economist, she essentially argued in a piece that the US is not in a recession. And she said that her rule was meant to be broken. One of the reasons for why this rule is not working right now, according to her, is the fact that there has been so much immigration into the US. So unemployment rates, you've got to account for all of that when you look at this nearly 0.5% increase that it showed at the end of the jobs data that is last Friday. So that's another point which the market took note of. Apart from that, just market indicators, the 2-year Treasury yield is back above 4%, slightly so. The 10-year Treasury yield is at about 3.99%, just under 4%. So there was about a 5 basis point lift there on the 10-year, which basically gets us to the market levels here. Now, yesterday was disappointing. Remember, day before yesterday, which is Wednesday, the Nifty saw a 300-point rally. Yesterday, we gave back 200 points. So, we've got our work cut out for us. At the day's high yesterday, the Nifty was within 10 points of the lower end of the gap area, a level we put out yesterday morning as well. So the high was 24,340. The lower end of the gap area is 24,350. And that gap essentially is the immediate near-term important resistance zone. So you got to cross and get past this 24,350 to 24,686 levels one by one. Bank Nifty, and then of course on the downside, the swing low becomes important. 23,893 is that number, which was the recent swing low. Bank Nifty outperformed the Nifty. It closed in the green on a day when the Nifty was down 200, but it ended absolutely flat. So there was no help from the Nifty Bank because everything else did so poorly. On the way up, resistance again here is this lower gap area, which is 50,747 for the Bank Nifty. And above that, you're looking at the 40-day exponential moving average, which is 51,085. Supports for the Nifty Bank come in at the 50% retracement, 49,717. And then the swing low, which is 49,659. I mean, you've got to take these markets day by day. GIFT Nifty will come up on your screen. I looked at, F&O positioning, etc. as well. FIs are long, but very small longs. I mean, it's on the client side as well, not very much. Positioning in that sense is kind of clean. From an F&O perspective, index futures perspective, the GIFT Nifty indicating a 250-point higher start. It'll be good to kind of close with those gains, if not more, by the end of this week. Sonia.
Oh, absolutely. A green on the screen, right? I mean, it's almost as if we've left the sell-off behind, especially Wall Street and what we've seen over there. So the GIFT Nifty is suggesting a big up move this morning, 250-point up move. There was a strong bounce back in global markets, as we've been telling you. The Dow was up 680 points. The S&P 500 saw its best day since 2022. This is after the jobless claims data came through. Nasdaq pretty much led the rebound, actually. It was almost a 500-point rally over there. And the focus could be on tech stocks back home as well. So a buy on dips is something that has worked and will work today as well. In terms of individual stocks, right, I just want to talk about some of them. You have Eicher Motors that came in with a decent set of numbers post-market hours, so perhaps we can see that stock move well in trade this morning. You've had ONGC, which has been topping the charts lately. Morgan Stanley, in fact, raised their target price on ONGC to 430 from 302 earlier. That's a big upside to the current market price. Biocon, actually, numbers were on the weaker side, so just keep an eye out on that. And there's the Ola Electric listing today, so we'll watch that one. It's the first electric two-wheeler to list on Dalal Street, so it's a pretty big one at that. And, the first OEM after a very long time listing on Dalal Street, so this is going to assume importance for sure. But for now, the GIFT Nifty is suggesting a very strong start.
Well, Prashant, the point that you made with regard to the US jobs report, normally we just look at the first Friday of the month and say that non-farm payrolls data is important. Suddenly now we have to look at these other data points as well. So it's become a little bit more exciting, given the fears of recession. So we'll have to keep an eye out on that. But as we know, the GIFT Nifty is suggesting a big gap up. But the start is important, but where we close is going to be even more important. And can we have a good close to the week? That's going to be the important factor that we'll be tracking today. Well, yesterday, why was it weak? One of the factors was that the net institutional number was negative. It was close to around 2,000 crores, which is the highest we have seen all the way since the second week of June. So that was the problem pocket. Or we can take 500 to around 1,000 crores of a negative sell number. But when it goes to 2,000 crores, that's what's putting pressure on the markets. In yesterday's trading session, I was tracking a live indicator, which is the premium on the Nifty futures. It came down to around 28 points. You thought maybe there are shorts in the system, but actually there was more amount of unwinding that we saw on the Nifty open interest as well as the Nifty Bank open interest. But what do the FIs do? Well, the long positioning has come down by 90%. Yes, I've not made a mistake on that. It's come down from around 1.5 lakh contracts to around 15,000 contracts in a matter of 5 sessions. So that's the kind of reduction that we've seen. When you get some shorts in the system, it helps that bounce. So I like this screen actually. What about the client positioning? Well, they were net short with close to around 50,000 contracts on the short side. Well, in fact, that's turned around as well. So the client's short positioning from around 50,000 net short contracts, that's moved to around 51,000 net long contracts. So that's an interesting data point as well. Well, moving to the Nifty levels then, let's pull up the options data. The 24,200 call, well, that saw a fair bit of open interest build up in yesterday's trading session. 24 lakh shares getting added, premium at around 155 rupees. So if you go out there and you add 150 to that 24,200 mark, you'll get the resistance zone, which comes in at around 24,350. And the last few sessions, if you look at it, this has been the congestion zone all through the week. We have gone closer to around that level of around 24,350, and we've seen a bit of a U-turn as this data point is telling you. So that's the resistance zone. We start off in the green. You want to end closer or maybe beyond that level. Important to track. Well, let's move to the Nifty Bank. Yesterday, we said it was a weak trading session, right? But the Nifty Bank ended more or less flattish because HDFC Bank is getting into the big week, the MSCI Q that comes in next week. And that stock has been rock solid, defending the 20 DMA as well. And that part of the market could hold one end up because of HDFC Bank. But since global Qs are positive, you have high beta that's doing quite well, risky assets as well doing well. I'll keep an eye out on the metal index. Maybe stocks like Vedanta could do well because there's a bit of a pop overnight. And global facing themes basically, IT as well as metals, both of them have got clobbered. If things are stabilizing, I'll keep an eye out on both these two for today's trading session. Start in the green. Let's see if we build on from there.
Okay, 250 points in the green for the market. So that's what the GIFT Nifty is suggesting. But before we get straight to individual stocks, let's also get you some money market views and what you can expect on the rupee. Lakshman B of Federal Bank says that the Indian rupee hit an all-time low due to continued unwinding of carry trades and dollar demand from local importers. The dollar index recovered from a 5-month low on the back of strong resumption of selling pressure in the yen and weaker US jobless data. The market now awaits the CPI data in the following week. And for the coming sessions, he expects the dollar INR to trade in a range of 83.70 to 84.15 to the dollar.
Okay, well, we've got some news coming in on bonds as well. So Lakshmanan weighs in there. He says government bond yields traded lower, tracking a fall in US Treasuries to a year-low level after weak economic data bolstered bets of a rate cut cycle in the US. The RBI MPC policy was in line with expectations with no change in rates or stance. The tone of the policy remains cautious with uncertainty on food inflation. In the coming sessions, the Indian 10-year benchmark bond yield could trade, he says, between 6.8 to 6.95%.